Lower monthly payments sound great, but what exactly is a mortgage buy down? And when does it make sense to actually use one? What is a buy down? A mortgage buy down is a strategy that lowers the interest rate, which then has a domino effect and lowers the monthly payment at the beginning of the loan. And this is often structured over 1, 2, or 3 years. At first year, the percent can be lower for that full year and then go down to or go back to the note rate. And ultimately, the payment does go up a little bit. It's always good to anticipate and make sure you're fully knowledgeable on this opportunity as that payment, if you get used to that payment within the first, second year, are comfortable with it, and that third year or that second year for some, that might surprise depending on the loan amount, of course. So this is just simply what I've came across and my expertise here to help you. Everybody is a case by case basis. So obviously contact your lender, your broker to understand this opportunity a little bit better because they should be able to explain this in full, just as I am today. All right, so why some buyers consider buy downs? Short-term relief, flexibility, adjusting to future income or future plans, events, things, anticipations, possible refinance plans. So interest rates go down, it's worth the exploration. You can look at that. So there's multiple reasons that people do consider refinancing, purchasing, changing plans, homes changes, life changes. There's so many timelines that we're on, you know, new baby, um, say new family, blending families, first home, maybe have to move a elder and an elder aunt, cousin, a family member. I don't know what the case may be, but you may have to make some changes there. Living situations change all the time, and that's for everybody. Um, but yeah, we're on different timelines. So short-term relief, flexibility, adjusting to future income or future plans in general. Seller concessions. So this is great. There are situations where when you are purchasing, you have opportunities that are the seller just wants to get rid of the house or something, whatever the case may be, or they agree to something, just depending on your offer. These offers are very tricky. I know realtors that deal with them, and they are case by case basis. And the market has a huge effect on this too. However, if the seller is able to pay for some of those costs, seller concessions, contributions, they do matter and they do count. Sometimes they're very helpful, especially if you're just looking to get in a home and, I need to get in this home. I need to have a little bit extra to put aside for this, that, whatever the case may be. Maybe you're purchasing furniture. I don't know. There's a lot of things to consider. So, seller concessions are great when they are available. Now, some important considerations like temporary payments. Obviously, one of the biggest things to understand is that the lower payment is just temporary. Okay. It's temporary. So always look ahead, asking yourself, am I going to be okay with this payment jump of so and so amount? You should be very knowledgeable on what that amount is. Also considering your taxes, your homeowner's insurance. Maybe you can cut costs there, or maybe those costs might go up. I don't know. Obviously, everything changes all the time, especially with our cost of living. Things change all the time, and we just gotta anticipate those type of changes. Okay, so just because a strategy exists, it doesn't automatically mean that it fits every situation. And I say that with approvals, pre-approvals, things like that, just because you're like approved for a certain amount or whatever the case may be, doesn't mean it's always the right fit. Yes, it is good to know and be knowledgeable of everything and all aspects of the opportunities that you're given. But if it's not right, not the right time, just don't make that move or maybe put it off. And at least you know you have that option. Okay. Some questions to ask yourself. So this is really great. Is this temporary or permanent? So always ask those questions. Broker, your lender should be able to go through those very quickly, letting you know the ins and the outs, the ups and the downs, pros, cons, however you want to slice it. What happens later? So just anticipating, okay, yes, our payment is going to go up about 300 to 400. Are we going to be okay with that? Is that going to be comfortable for us? I don't know. So a quick example, I use this in another webinar, is that my son had daycare, or not daycare, kindergarten, and I paid 700 a month, which is huge chunk of our budget. However, in knowing that I was only paying this for a set amount of time, that did help me and with financial decisions too. So that can help you, just simple things like that. Or it could be opposite. Maybe you're anticipating some influx of cash, something like that. So it's always good to know and see what's out there, just kind of knowing all your options and making the best decision for you and your family, yourself. Okay. So my goal with these workshops is always the same, to help homeowners understand these opportunities very, very concisely without pressure and to make a calm decision from somebody who has been in the field for a very long time, seen a lot of things. I worked in person, face to face at the bank. I worked over the phone, so you can see my headset, call center for 3+ years. And yeah, so now I'm on my own. I've mastered a lot of this stuff. So I'm here to kind of look at aspects a little bit differently than normal. Come on and learn, get about 10% smarter when it comes to your mortgage, and I'm just here to help. Ultimately, I hope everybody has a great rest of their evening. I like doing the Wednesday webinars a little bit better. They just work out a little bit better with scheduling and things. So have a great night. We'll see you guys later.